Fresh UK Gilts turmoil sees gold fall with silver, palladium up as Russia hits Ukraine. Gold prices in major currencies fell on Monday as the long-term UK bond yield jumped following the Bank of England's surprise announcement of extra gilt buying, while the price of palladium, which finds 40% of annual supply in Russia, jumped as the Ukraine war worsened, writes Atsuko Whitehouse at BullionVault. Spot gold prices in US dollar terms fell 1% to $1,677 per ounce after dropping 1% last Friday on the hotter-than-expected US jobs report for September, with the unemployment rate dropping back to its modern record low of 3.5%. Gold priced in euros meantime edged lower by 0.5% to €1,730 as European stocks saw a fourth consecutive day of declines. The UK gold price in pounds per ounce meanwhile fell 0.9% to £1,515 as the pound made marginal gains in FX markets on Monday morning despite a fresh sell-off in UK government bonds. The Bank of England today surprised analysts and traders by announcing that it will double its emergency QE purchases to as much as £10 billion per day between now and Friday, its existing deadline for trying to protecting pension funds and other leveraged players from continued market turmoil following the new Chancellor's mishandled tax-cutting budget announcement. The UK Treasury today also sought to calm the gilts market by bringing forward a much-awaited fiscal plan showing how it plans to finance quasi-Kwarteng's historic tax-cutting promises to the 31st of October. But UK bond prices fell after today's new moves, driving the 30-year gilt yield as much as 17 basis points higher to 4.56%. Its highest level since the immediate aftermath of the bank's initial intervention on the 28th of September following Kwarteng's mini-budget of 5 days before. With the Bank of England so far buying only a fraction of the upper £5 billion daily limit set less than 2 weeks ago, the market doubts if the BOE will fill orders to the maximum limit, while the new measures announced set an extension of its temporary bond buying is unlikely, says Pooja Kumar, rate strategist at Canadian bank Toronto Dominion. The BOE has bought just for £0.6 billion of bonds so far, about 12% of the £40 billion capacity of the programme to date. The bank also announced a new short-term lending facility designed to ease strains on pension funds that use liability-driven investing strategies, which are at the centre of the market turmoil. UK stock markets fell with the FTSE 100 dropping 0.3% on Monday, now down 2.6% so far since the mini-budget of the 23rd of September. The pan-European Stoxx 600 touched a one-week low on Monday morning amid concerns over economic growth in the face of tightening monetary policy and the war in Ukraine. Moscow forces hit Kyiv and other Ukrainian cities early Monday, attacks condemned by the European Union as barbaric and cowardly, a day after President Vladimir Putin blamed Ukraine for a terrorist attack on the only bridge connecting Crimea to Russia. The price of palladium rose 3.3% to $2,262 per ounce, but held well below its all-time high of $3,444 hit in March as the US and EU moved to embargo Russian supplies of the precious metal, primarily used in gasoline autocatalyst systems. Platinum, which finds 2/3 of its demand from industrial uses and 12% of global mine supply from Russia, fell 0.6% to $911 per ounce, while the price of silver, which finds nearly 60% of its annual demand from industrial uses, fell 1.7% to $19.80 per ounce, a one-week low.